Right now, the stock market is active and trading, and the ticker ASST is showing significant movement, currently priced at 1.64 US dollars, which is a substantial jump of over 8.6% on the day. The stock gapped up at the open and has seen a surge of volume, pushing it to an intraday high of 1.72. Now, the immediate expectation, and this is the absolute most critical thing you need to understand today, is that there's massive confusion surrounding this ticker. You may be looking at your screen and it might even say Strive Inc. next to the ASST symbol, just as it appears in many data feeds. The expectation, therefore, is that you are looking at Strive Asset Management, the firm that has been all over the news for its new preferred stock offering designed to amplify its Bitcoin holdings. The common belief is that this 8.6% pop is a reaction to that Bitcoin news, but the reality is completely different. The ticker ASST does not belong to Strive Asset Management. The ticker ASST belongs to a company called Asset Entities Inc. This is not a data error you can ignore, it is the entire story. The momentum you are seeing is very likely being fueled by a massive case of mistaken identity, where buyers are piling into the wrong stock, thinking they are getting a piece of a Bitcoin play. This is the first layer of a very complex and dangerous situation. The general belief, for those who've gotten past the name confusion, is that this is just another volatile, low-float sub-$2 stock, the kind that traders try to flip for a quick gain. But the real underlying story is far more intense than that. The reality is that this stock, Asset Entities Inc., has become a ground zero battlefield. This is not about Bitcoin. This is about a direct, high-stakes war between retail traders and a massive entrenched short-selling position. The real data point that matters today is not the Bitcoin news. It is the fact that Asset Entities has an enormous short interest, last reported at over 32% of its entire public float. That is not a typo. Nearly 1/3 of this company's available stock is being held by institutions that are betting, and betting heavily, that its price will go to zero. So let's analyze this intraday movement through that lens. This 8.6% jump to 1.64 is happening on extremely heavy volume. We are seeing millions of shares change hands, placing it on the most active lists. This is not a quiet drift up. This is an explosion. This volume is coming from two distinct and conflicting sources. First, you have the mistaken identity buyers, as we discussed. They're buying the Strive and Bitcoin headline, and in doing so, they are providing the initial fuel. Second, you have a much more sophisticated group of retail traders who are monitoring short interest data. They see the 32% short float. They see the 55% off-exchange short volume, which indicates large institutional shorting, and they are intentionally piling in, trying to ignite a short squeeze. They are using the confused buyer's momentum as cover to launch an attack. Today's 8.6% pop is the first shot in that battle. Let's talk about this short seller presence because it is the single most important factor for this stock. A 32.74% short interest is an exceptionally high number. It represents a deep, fundamental conviction from institutional players that Asset Entities Inc. is wildly overvalued. What is their thesis? They are looking at the company's fundamentals. Asset Entities is a company that has a market capitalization that has fluctuated around $1 billion, yet it has negative earnings per share. It is not profitable. The short sellers are betting that this valuation, which is based purely on the promise of a digital-first business model, is completely detached from a reality where the company is not making a profit. They believe this momentum, fueled by hype and now by mistaken identity, is temporary, and that the stock will eventually collapse under the weight of its own financial reality. They're not just guessing, they are paying significant fees known as borrow rates to maintain these positions, which means they are on a clock, but they are confident. This brings us to the actionable part. How do you, as an investor, even begin to analyze this? First, you must completely separate the news about Strive from the ticker ASST. They are not related. Second, you need to look for the data that the squeeze traders are watching. This includes the borrow fee rate. If that rate is spiking, it means it is becoming prohibitively expensive for shorts to hold their positions, and they may be forced to cover or buy back their shares, which adds fuel to the fire. You must also track the days to cover ratio. This number tells you how many days of average trading volume it would take for all the shorts to close their positions. A high number, say over 5 or 6 days, can indicate a much more chaotic and potent squeeze potential, as they cannot all get out of the exit at once. Recognizing a coordinated short attack is difficult, but the signs are a high short interest combined with a sudden coordinated campaign of negative articles or social media posts. Here, it seems the opposite is happening. Retail is using the high short interest to attack the shorts. What's your take on this 32% short interest? Is it a smart fundamental bet against a hype-driven stock, or is it a sign of over-leveraged greed that's about to get squeezed? Comment below. So, who is the real company here? What is Asset Entities Inc.? This is a company that operates in the digital economy. Its business model is focused on social media, digital marketing, and the creation or management of digital assets and communities. It's a very modern, new-age business concept. The market at some point gave this concept a very high valuation, as we can see from its 52-week high of $13.24. The expectation was that this company would be a key player in the creator economy or the next wave of digital interaction. That is the bull thesis. But the reality, as shown by the financial data, the negative PE ratio, the negative earnings per share, is that this promise has not yet translated into a profitable, sustainable business. It's a cash-burning operation. This disconnect between the high-growth story and the cash-burning reality is precisely what attracted the short sellers. They are betting that the story will break before the profits ever arrive. This leads to the sentiment we're seeing on social media platforms, which is a perfect reflection of this chaos. On platforms like X or Reddit, the discussion is completely split. You have one large camp of investors who are posting with complete confidence the news about Strive's Bitcoin fund and tagging ASST. They are genuinely confused and are telling others to buy, creating a feedback loop of misinformation. Then you have the second camp, the squeeze traders. They are in different forums, and they are posting the actual short interest data. They're talking about the float, the borrow rates, and the off-exchange volume. They are organized, and they see the mistaken identity buyers as useful in their quest to trigger the squeeze. This is an incredibly dangerous mix. You have one group buying a stock they do not understand, and another group buying it for purely technical, mechanical reasons, all while a third group of institutions is betting it all goes to zero. So let's map out the possible future scenarios for ASST. Where does it go from 1.64? Scenario 1 is the short squeeze, which is the retail expectation. The stock is already up over 8.6%. The volume is high. If the combined buying pressure from the confused Strive buyers and the dedicated squeeze traders can push the stock over its intraday high of 1.72 and then say over the $2 mark, a cascade could begin. Short sellers who set their stop losses in that range would be forced to buy back shares, which creates more buying, which raises the price, which forces more shorts to cover. This is the gamma squeeze or short squeeze that traders dream of. It can lead to a rapid, violent, and temporary spike in the price, but it is musical chairs, and when the music stops, the crash can be just as violent. Scenario 2 is the fundamental reality, which is the short seller's expectation. This hype, especially the part based on the mistaken identity, cannot last forever. Eventually, data feeds will be corrected, the financial media will clarify the confusion, and the tourist buyers will realize they bought the wrong stop. They will sell. When that catalyst disappears, the only buyers left are the squeeze traders, and if they can't force the squeeze on their own, their volume will dry up. At that point, the only thing left to look at is the company's actual performance. And if ASST Entities Inc. cannot produce a surprise earnings beat or some transformative profitable news, there's nothing to support the stock. The short sellers who are patient will simply hold or even add to their positions on this pop. The stock will then begin its long, painful grind back down, validating their fundamental thesis and heading back toward that 52-week low of $0.34. So, what should you be watching? The most critical signal is the borrow fee rate. If it spikes, the squeeze is on. If it stays flat, the shorts are comfortable. You must also watch for any official press release from ASST Entities Inc. itself. Do they clarify the confusion about Strive? Do they announce new contracts or a path to profitability? Their silence is just as telling. And finally, you have to watch the next official short interest report when it's released by the exchanges. Did the shorts add to their positions during this pop? Or did they get scared and start to cover? Comment below right now. How many shares of ASST do you hold, and are you here for the short squeeze, or did you believe this was the Strive Bitcoin play? Be honest. Let's see what the sentiment really is. To summarize what is happening with ASST, this 8.6% surge to $1.64 is one of the most complex and treacherous setups on the market today. The widespread expectation, fueled by faulty data, is that this is a momentum play on a Bitcoin-adjacent company called Strive. The hard reality is that this ticker, ASST, belongs to ASST Entities Inc., a completely different, non-profitable digital media company. And the real underlying story is that this company has become the epicenter of a war between squeeze-seeking retail traders and a massive 32% institutional short position. You are watching a battle play out in real time. It is a battle between mistaken identity, technical market mechanics, and cold, hard fundamentals. The 52-week range, from 13.24 down to 0.34, tells you everything you need to know about the possible outcomes. The reality is, this is not a stable investment. It is a tinderbox. And the confusion is the match.